That's it. All right. When it comes to property investing, we often hear golden rules like location's everything, buy bargains, or expect property values to double every 10 years. But that's not necessarily the case. To explore and debunk some of the most commonly believed myths about successful property investing, we are joined now by property investment expert Michael Yardney, the CEO of Metropole Property Strategists. Michael, we always love hearing you talk. Just some fantastic tips that we get from you. Firstly, when we're talking about these myths, because we often hear these kinds of rules that you need to follow for property investing, but it's not necessarily always what you should do.
No, it's not. So you're right, Bridie and James. Unfortunately, there are these myths that abound, and that's probably why a lot of property investors fail. And you mentioned a good one a moment ago. A lot of people think properties double in value every 10 years. That's what conventional wisdom says. But if you look back over the last decade, there's only 3 states where overall property values have even gone up above inflation. That's Melbourne, Sydney and Canberra. The other states haven't even kept up with inflation. And then within those states, there are some properties that have done better than the averages and others that haven't done as well. I guess that's how you get averages. So that's an important myth not to follow. In other words, don't buy. You can't just buy any property and hope it goes up in value.
What about the location, those 3 big words that we hear all the time? Give us your take on that.
Well, location is critical. In my mind, the capital growth of your property, which as an investor or as a homeowner is what you want. You want your property to go up in value. 80% of it is driven by location, but about 20% of it's related to the property that you buy in the location. So yes, you've got to choose a location that's got lots of growth drivers, and then you've also got to choose the sort of property that's going to be in strong demand by owner-occupiers, that's appropriate for the demographic and that's bought at the right price. So location is important, but you can't just buy any property in that good suburb, James.
So right type of property in the right location at the right price, of course.
Yeah, so it's a combination of things. So when we select an investment property, we start with looking at where the growth drivers are, where employment's going to be, where jobs growth is going to be, where wages growth is going to be. And then we actually look for locations where there's going to be more people moving in. That's going to create demand. But then what sort of properties are they going to want? In the outer suburbs, they're more likely to be 3-bedroom properties with large blocks of land, maybe 4-bedroom and a media room. But in the inner suburbs, an apartment still makes a great investment, Bridie.
I'm wondering, what about the adage of, buy in the area, buy in your own backyard?
That's where we feel comfortable. You've grown up there, you know what's going on. But in general, that doesn't work, considering we said a moment ago that lots of locations haven't gone up. So don't just buy where you're comfortable. Nowadays, more people are becoming borderless investors. And if you don't live in the big capital cities, you then need somebody who knows those markets. You can do a lot of the research on the internet. The trouble is there's one big thing that's missing, and that's perspective. Continuously on your show, you're speaking to agents who know why one side of the street is better than the other. I just saw that magnificent house that's coming up for auction in a couple of minutes' time, but there'll be other ones in the street that won't be as good as that. So you can't just look on the internet and buy any property. Yes, you've got to look outside your backyard, but then get a local expert to help you.
And what about, buying a bargain? Is, buying the cheapest house you can find? I mean, does that work?
Well, we all like to get a bargains, but today we've got a very, very informed market. There's all the information you can get online, so buyers are informed, but so are sellers. So when we buy properties as buyers agents for clients, if one of my guys came on Monday morning to the meeting and said, hey, we got this fantastic bargain and no one else bid, I'd wonder, what's wrong? Why didn't they see that we did, or didn't we see that they did? So therefore, in today's market, you've got to not overpay, but you've got to recognise that there aren't bargains. You make your money when you buy a property by buying the right property, not by buying it cheaply. In other words, the right property, one that'll be in continuous strong demand.
And what about those people who are sitting on the sideline waiting, looking for the next big breakout suburb, the next big, must-have place?
Well, that's hot spotting. It's also speculating, and I guess other part of that argument is be fearful when others are greedy and greedy when others are fearful. And I used to think when I first started investing, that's the way to go. But imagine all those people who've been sitting for the bottom of the market in Perth and in Darwin for a number of years waiting for things to turn. Similarly, those people who've bought in short-term speculative areas of Australia are now missing out. So I'm looking for areas that have got multiple growth drivers rather than speculating. So looking for the next hotspot to me is speculating. And people may have 3 years ago, 4 years ago said, hey, I've missed the bottom of the cycle in Sydney, I've missed the bottom of the cycle in Melbourne or Canberra or Hobart, maybe I shouldn't get in. And those who are looking for those speculative next hotspots, look what they've missed out on, James.
So is it really, you know, you've got to think about property investing as a long-term thing. It's not something really you can just get in and make a quick buck.
Well, that's another myth, Bridie. You're 100% right that get rich quick. It doesn't work that way. Warren Buffett cleverly said wealth is the transfer of money from the impatient to the patient. The costs of buying a property are in the average around 5% with stamp duty and purchase costs. And so already the day you buy, you step back a little bit. So it takes time. But if you buy a good property and hold it in the long term, it'll give you the equity to buy another one, and also the rents will go up and help you service your debt. I think I've mentioned on the show before, my first property cost me $18,000 and I had no idea how I was going to pay off the 30-year mortgage, and I got $12 a week rent and I was excited. Look at the bargain it was today. Yeah, time works wonders, Bridie.
Yeah, that's it. So what's your sort of final advice then when people, you know, because you hear these and you believe these sorts of myths, what's your final advice for people?
Well, I guess the advice is educate yourself. A lot of people get involved in property investment thinking they know about real estate because they've lived in a house, they've rented a house, they've owned one. But the same applies for home buyers also. Even though you shouldn't just have your investment hat on, you really should look as an investor to understand what's going to make the value of your property increase over time, because for most Australians, their biggest asset is their family home. So therefore, educate yourself, learn. There's lots of good books, there's fantastic resources, there's good shows like this, and don't just rush in, take time, and then get a good team around you. If you're the smartest person in your team, you're in trouble. So if you're talking about investment as we are today, get an accountant to give you some advice about structuring, get a good mortgage broker to get you through the maze of finance, because that's really hard at the moment, and get a good property strategist on your side, somebody who's independent, who's not selling property, who can give you some advice.
Fantastic. Love listening to you, Michael. Thank you so much for that.
Thanks, Michael.
My pleasure. Thanks, guys.
Michael Yardney there from Metropole Property Strategists. Coming up after the break, how to haggle for your home loan. Steve Jozefsky from Mozo is going to be showing us how you can save thousands just by asking.